Good evening, Nick Inman from VolumeProfileTrader.com on Saturday, September 8th, and let's actually just jump right into it. The markets are, over the last couple of days where we've seen a continuation higher after basically a month-long consolidation in August. We did have the vertical move early, but you could argue from after the first third of the month was over, we basically moved sideways. So there's a little pent-up demand, whether it be shorts getting squeezed or longs getting longer, longs getting involved, whatever. The market pushed higher, and this 1395 level proved to be support, and we saw a continuation to the upside. You could have looked at any chart for the most part on Thursday and Friday, and you see a 2-day really nice reversal in a lot of stocks. So what I'm going to do is I'm going to go through a few stocks that I think are going to work out, potential trades, and I'm going to go through the names that I'm currently holding and why I'm holding them, why I think it makes sense, etc. So another thing, first of all, missed a few trades, like for example MasterCard, LinkedIn. Those were trades that I recommended. Personally, I got out of them. Small gains, small loss, but hopefully you stayed in if you did take the trade, and if you did, you made a boatload of money. So cheers if you did. If you didn't, no problem. Let's get them next time. Also, I guess we should just go right into it. The GLD call spread 164 by 167 is up about 150%, actually a little above that, almost, about 150% from where we bought. We bought it around 80 cents. It's now trading above $2. So, that's another trade that, frustratingly, I took off for no real reason. My thesis was higher price in GLD. We got it, but I was, I took the trade off too early. So whatever. We live, we learn, and we move on. Let's try to focus on what we have in our portfolio right now and what we can add to. So, first of all, S&P, maybe one more update, and then we'll see some type of pullback or consolidation. Just kind of pointing that out. NASDAQ, pretty flat on Friday, which shows you, a little bit of relative weakness in technology, but, it's okay. Dow barely made new highs, so the S&P is clearly the front runner in terms of performance, and the Russell has caught up. So volatility index, big downdraft the last 2 days. Just watch under 14, basically where we closed. Just watch for a potential bid. That's all. Okay, let's get into what we own. ConocoPhillips, bouncing off of some moving averages here, bouncing off of this high volume area. I'm just going to look at the 1-year charts to get a longer term perspective. We do have trend line support that it's kind of bouncing off of. I drew a top of the channel just in case that kind of works, because it has for the last couple of tests of this sloping level. So a retest around basically north of 58, south of 60 is also a trend line resistance for 1, 2, 3 successful tests, which creates a trend line. So that's about basically below 59.50 is what you'd be looking at. However, we'll see. This could be a big, nice, long consolidation triangle pattern, and we're about to see a breakout to the upside. If we look at it on a weekly chart, you can kind of see, a nice little hammer pattern off the point of control. I'm not necessarily saying that this is going to make new highs. It's just the market is strong. The market's making new highs. Just keep an eye out for names, that are performing. You do want to see outperformance. So I'm not saying ConocoPhillips is going to be a slam dunk, but it's giving you low risk buy opportunity. McDonald's, this was a trade, 90 by 92 half call spreads. This was actually a really easy trade. Again, I took off for a small loss, but now it's actually sitting at really nice profits on that spread. If you took it, it's trading $1.15. Well, that's where it closed, and I think the spread was for 70 cents, so 75 cents maybe. So it's up almost 50%. So just consistent winners, and a few of them I just miss out on. So that's kind of how it goes sometimes. MasterCard, another one. We just have a consolidation pattern here off the point of control for the year. This gives me a sense that this is a breakout pattern, which we're getting two nice volume days after long-term consolidation, multiple months. We have upsloping line, basically this potential triangle is coming to an apex. If there's any fruition to that or any real true value, this is basically a level that you'd want to see a breakout from. So just pointing that out. Visa, relatively weak. Similarly, American Express, relatively weak. So MasterCard, maybe it's just a short-term thing, bounces up to the value area high, and that's the trade. You never know. But I look again back at the S&P, making new highs. That's kind of what you want to see. So let's move on. All right, the gold trade, the silver trade, just absolutely killed this one. 157.11 was where we bought GLD. That's where I said if you want to add to your position, whatever. That's where I bought more, being paid off big time for that. Now, the GLD position is up about 7% from where we bought it in 2 weeks, 2 weeks ago, excuse me. And silver, just from where I bought it on, let's see, it was the 31st or the 29th? No, it was 30th of August, excuse me. Since then alone, I think the position is up about 10% for me. So just incredible moves that we're seeing in the metals. Might as well look at copper, right? I'm pretty sure we talked about this long-term buy on copper, or at least a major level, and finally we're getting a breakout. So copper should have some room to run, which you look at something like Freeport. This has been telling you we're seeing a turnaround. We got a higher low here, and, basically a blast off to new highs. Now you're looking at this high volume area here. What is price going to do within it? Is it just going to shoot right through it? And then from there, you'd be looking up towards about 43 as a potential target. So just keep it in mind, really. All right, here's a trade recommendation that I think is going to work out, and it's Yum Brands. And the trade idea is to get involved to the long side with some call spreads. So my thesis is Yum Brands is probably going to move off of this 233 moving average and this high volume area here, which includes the point of control, which is what we want to see for a nice move. What we're going for is simply a base hit. We're not trying to hit a home run. We just want a really nice base hit. So let's go out to October and let's buy the 67.5 by 70 call spread. Anything under, it's trading right now, or it closed at 66 cents by 72 cents. So anywhere around 70 cents, plus or minus 5 cents would be a great entry. Anything, I would say put your stop around 40 cents and kind of see what it does. So basically what we're doing is we're paying 60, we'll call it 70 cents to see a potential payout of $2.50. So we can almost quadruple our money by the end of October if we get some type of move up towards this high volume area here on Yum Brands. So I do think that this is a good trade candidate. Our goal is to get this trade to break even, so we're not risking any money. So I would risk around 25% of the spread, 30%, to see the potential payout of $2.50. So instead of risking 70 cents, the whole cost of the spread, risk maybe half or less than half of that and just see the potential payout, the risk-reward ratio, as it improves from 3.5 to 1 up to 5.5, 6 to 1. That works, and that's what you want to see. So I do think that's a good trade candidate. I'm looking at other names like DuPont, Dow Chemical. I'm just looking at these names. This is a long-term bullish wedge pattern. We have the point of control right around 30. Just keep an eye on it. We've had 3 nice flush out volume days to the downside. Let's zoom in so we can see this. Bear with me. Okay. We have had 3 nice flush out days above average selling volume right at this, bullish wedge support, basically double bottom. Now we're getting a nice move off of that. What I'm saying is if Dow Chemical holds above, say, 29.50, I think you want to stay involved in this name for a test of north of 33 towards 34. It's just, that's probably what I'm going to be doing on Monday, and I just want to, state it out loud. It looks like a good opportunity. What you'd want to see is some type of higher low here where this high volume area holds and you see a continuation to the upside. After this nice double bottom, good sell volume, and then a nice 2-day volume reversal with good price action, good buying, you can't really ask for more than that. So these levels right here, right now, sure, they're at the top end of the range, but the anticipation is having a stop around 29.50, trying to risk less than 3% or so would be ideal. So let's try to focus on that and look for a move up towards 33. If you're looking for some type of option play, buying 31 by 34, and then this is just off the top of my head recommendation. Let's see, 31 by 34. No, we'll go to 33. All right, expiring in October, that is trading for 40 cents. So you could make $2 off of a 40-cent spread. That is great risk-reward, ratio, and that's something that I think you want to be a part of. If you want a little more delta, go with the 30 by 33 call spread. It gives you a little more at-the-money delta, a little more price movement. So, Dow Chemical moves higher. You're going to have more sensitivity in that long 30 call as far as, relative for every $1 Dow Chemical moves. So basically you're willing to risk a little more downside because if this thing doesn't work out, and let's say it drops down to 29.50, what you're doing is by buying that 30 call instead of the 31, you're giving yourself less of a hedge. So if you're buying, for example, 10 contracts and you're risking, say, half of 80 cents, the 30 by 33 call closed at 90 cents. So if you're willing to risk half of that, 45 cents or so, then, with 10 contracts, that's $450. If you're willing to do it, if you want to risk less by being better hedged, but, the payout's going to be a little slower, and, it's really got to move. Well, you still want it to hit 33, but the profits won't really seep in until it really gets closer to 33. Then you go with the 31 by 33 call spread. You're risking 40 cents, half of that 20 cents, so you're risking less dollar-wise, and the payout is better. So just be aware of that. So if we're getting the same move, if our goal is still to get to 33, and it may take a month or so, then this isn't a bad idea. And this could be something that works in your favor. Just, kind of pointing it out. Not, you have to determine if it's right for you, but I do think it's a pretty good opportunity. Just to show you banks, Bank of America, point of control for the year, great consolidation, 2 days off. I mean, bam. The next target, next serious target at least, is around $9, and then from there about 963, and then of course the highs. So you do have a few levels that you want to be aware of. If you want to use fib, let's see. So your retracement would be about 61, around $9. I'm just kind of, I use Fibonacci retracements just as kind of a level. If I want to see the retracement of a potential move to see where it could potentially stop, I would look at this. 61.8% retracement was pretty much on the money in terms of support. And then once it got up towards the point of control with strength here, that's kind of when you want to, that's a longer term buying opportunity. So I just do want to kind of point that out. JP Morgan, it's trying to close the gap here. Goldman Sachs pushed right up into this high volume area here. Expect this one to slow down, but this has just been a monster. And notice again, let me delete these lines so we can see it better. But this point of control for the year is really something. Look at the, if you're getting involved at those levels, 95, 50, you're up a lot in the last month or two. And that's something that you can really make a lot of money with. So just be aware of it and realize when the opportunities do come, take advantage of them and make some money. So really, I don't really have much else to say. I did put on some protection in GLD. I put on put spread 67.5 by 66.5, and I bought 68 puts. And the only reason why is because I would expect some type of fill. 66.5 was the bottom of those calls. I would expect some type of fill from gold in the next week or so. They expire at the end of this week. So we'll have to wait and see. And I should make a little money on those puts. And plus I get some downside protection for the week. And that, I do like that, especially after a nice little move like this. We could see some consolidation. Overall, I think it's right to be long this market still. I don't think there's anything wrong with buying protection, at the money put spreads on, big time ETFs, index ETFs is what I'm trying to say. I don't think there's a problem with that at all. Even if you want to do it on something that is underperforming, that's fine. Just realize there is a little bit of momentum to the upside here, and you want to be aware of that. I think, the idea of Yum Brands moving up towards 70 is an idea that will pay off. We just have to kind of wait for it. Similarly, the DuPont, that looks like it's going to work. Dow Chemical, all of these names, the market in general looks like it wants to turn around, give you a push higher into the election, and then kind of reevaluate from there, or maybe even to like the, what Bernanke's going to say in the next couple of weeks. Sometimes it's hard to tell, but they do want the markets higher, and over the long term, it's right to be a buyer of the market. So take care, have a good night, and I'll talk to you Monday.